Welcome, G-Traders. You are watching a recap of the Asian session. Yesterday, Wall Street closed with the large gains. Stock markets in Australia, Japan and New Zealand followed suit in the morning. It appears the news about China's reopening somewhat negated fears about rate hikes. Nevertheless, traders remained rather cautious in the Asian trade. They are now anticipating inflation reports from the United States and China, which are on tap on a Thursday. Before they release, the market tension is likely to intensify. The World Bank unveiled the Global Economic Prospects report, and this report may weaken optimism in the markets as predictions are rather grim. The World Bank has warned that new shocks could lead to a recession in the global economy. Therefore, it cut its global growth projections to 1.7% from 3% in 2023. The Washington Institute also raised concerns about the global recession. Its analysts have mentioned many times the pace of a slowdown in the global economy in recent years. However, investors managed to find reasons for their optimism in the speeches of policymakers of the largest central banks at the Forum in Stockholm. Earlier, they tried to look for clues in some obscure remarks. Yesterday, they seemed to find some signal, even if there were none. Central banks and Jerome Powell did not provide any clues at all. For some reason, optimism increased. Investors also expect a further decline in the U.S. inflation, given that Jerome Powell avoided commenting on the prospects for monetary policy. The regulator is also waiting for fresh inflation data. However, the Fed is unlikely to abandon monetary tightening. Powell said that bringing down inflation requires measures that are not popular in the short term. Fed Governor Michael Bookman expressed a similar point of view. She said that the regulator still has a lot to do to curb inflation, and this is why more rate increases are necessary. CPI data will be published on Thursday. While risky assets were gradually rising during the Asian session, the US dollar was sliding down versus its rivals. On a Wednesday morning, it was trading near a 7-month low of 103.20, and the US dollar index consolidated near the previous closing level of 103. It was merely moving in the narrow range of 103 and 103.50, gradually declining. US government bond yields also fell amid expectations of a low inflation. If the inflation report is soft, the US dollar could dip lower. Despite the weakness, the US dollar managed to rise versus the yen. The pair reached 132.60 in the morning, moving in the rather wide range of 132 and 132.60. A slight increase in the pair occurred amid negative Japan's inflation data. Consumer prices soared to a 4-decade high. The figure is almost twice the 2% target set by the Bank of Japan. At the same time, the regulator sticks to an ultra-loose stance. The Fed, on the contrary, is the most hawkish central bank. And the dollar-yen pair is trading almost unchanged with the moderate growth ahead of the US inflation data. However, the main trend remains bearish. The pair is likely to test the support level of 131.90 and 129.50. The Australian dollar also made an attempt to advance against the US dollar during the Asian session. The AUD-USD pair was trying to consolidate the psychologically important level of 0.6898. However, the US dollar index is now recovering, so the pair is fluctuating in the range of 0.6884 and 0.6928. The Aussie has plenty of drivers. For instance, inflation accelerated again to 7.3% in December from a 6.9% in November, exceeding the Reserve Bank of Australia target range of 2 and 3%. It gives hope for a rate hike which is bullish for the Australian dollar. And Another driving force is rising commodity prices. China injected a whooping sum into open market operations. Today, the People's Bank of China has pumped 71 billion yuan into the country's banking system ahead of the week-long holidays. For commodity currencies, this was another reason to climb. The Chinese New Year falls on January 21, and this event is also fueling market optimism. If you want to open more profitable trades, you should be aware of a crucial market news. It's easy as a pie if you watch our video reviews. Hit the subscribe button and keep abreast of the latest market developments. See you soon!